on this computer. Perfect. So tonight we're gonna do chapter 5. We're almost to the finish line. So chapter 5 is the Florida statutes, rules, and regulations common to all lines. So I'm going to play this with a video. So this is like the quiz that we were doing yesterday that was harder because it was 5 and not 4. Yeah, let's see what it is.
We've been covering concepts that apply to insurance transactions in general, but now we're going to bring the discussion closer to home, the state in which you'll be licensed. Here are some questions for you to think about. Do you know who's in charge of the department that regulates insurance in your state? How about what you will need to do to maintain your license? What are some specific practices you should avoid to be in compliance with the state law and for the protection of your customer? Insurance regulations are there for a reason, and that is to protect the public. So it's crucial for you to understand producers' duties and responsibilities, both from legal and ethical perspectives. Focus on these learning objectives as you study the material in this chapter. Know the duties and responsibilities of insurance regulators in your state. Be able to identify different types of licenses. Know the requirements for maintaining your license in force. Identify trade practices that are prohibited in the insurance industry. This chapter will cover key laws and regulations that apply to insurers and producers, so be sure to pay close attention to all the time limits, dollar amounts, and other figures in this chapter. You need to know them for your state exam, so we recommend taking notes.
Perfect. So up to like chapter 1, 2, 3, and 4 have been everything that applies to insurance industry as a whole in the whole country. Starting this chapter is everything in the state of Florida. Okay, so that's a beauty that we're all here. So terms to know: appointments, the authority given by an insurer to an agent to transact insurance or adjust claims on the insurance behalf. So I know we were looking for that yesterday. So it's like the authority given by the insurer, meaning el asegurador, la compañía para la que trabajas, that will give the agent the authority to transact insurance or adjust claims. Cease and desist, to stop or discontinue. Commission, payment to the agent by the insurance company for placing insurance, usually a percentage of the policy premium. Exempt means not subject to an obligation. Home office, insurer's headquarters, principal place of business. Inducement, that's what it says, right? Inducement, an offer that attempts to influence the other party. Insolvent, unable to meet financial obligations. Reciprocity, a mutual interchange of rights and privileges. Statute, a form of written law enacted by the legislator. Insurance statutes can be found in the state insurance code. Subpoena, an order for someone to appear as a witness or submit testimony or evidence. So, insurance transactions and insurers. So we're going to go through definitions right now. So starting chapter 5 and 6, there are a lot of definitions. Okay, so it's going to be a little bit of common sense. It helps, again, the translated to the Spanish because ayuda a entender un poquito más, but it's going to be more kind of memorizing, okay, when it comes to these chapters. So the term insurance transaction includes any of the following by mail or any other means: solicitation, negotiations, sale, which is the effectuation of a contract of insurance, and advising an individual concerning coverage or claims. So the insurance transaction includes any of the following. So all of them. An insurance transaction could be me calling you, hey, do you need insurance? That's an insurance transaction. Negotiating, going through the quote, that's another insurance transaction. The actual sale of it, it's another insurance transaction. And advising somebody, you know, like doing the whole claim for death or accelerated benefits or changing anything on the policy, that's another insurance transaction. So anything related to doing with something with the insurance is called an insurance transaction. The insurance contract is an agreement between the policy owner which is often the person that's insured, and the insurer, where the insurer agrees for a consideration to indemnify the insured for loss caused by specified events. So the insurance contract is just the agreement that we have, we as a policy owner, with the company that's insuring us. And it's basically, we agree to pay the premium, they agree to pay the death claim if something were to happen. The insurers or principal is a company or organization that issues a policy of insurance. So again, the insurer, el asegurador, that's the company. Domestic, foreign, and alien. So the insurers, los aseguradores, pueden ser domésticos, foreign, or aliens. So insurance companies are classified according to the location of incorporation, their domicile. Regardless of where an insurance company is incorporated, it must obtain a certificate of authority before transacting insurance within the state. So know this, a domicile refers to the location where an insurer is incorporated, not necessarily where the insurance conducts business. So domicile es el domicilio. So como donde vive, pero donde se incorporó. Right? So you can be incorporated like Primerica, the domicile is in Georgia, but it does business all over. Right? Okay, domestic insurer is an insurance company that is incorporated in the state. In most cases, the company's home office is in the state in which it was formed. The company's domicile, for instance, a company charter in Pennsylvania would be considered a Pennsylvania domestic company. So for example, Primerica in Georgia, that's a domestic. It's a domestic company because it's in Georgia. A foreign insurer is an insurance company that is incorporated in another state, the District of Columbia, or a territorial possession. So currently the United States has 5 major US territories: American Samoa, Guam, the Northern Mariana Islands, Puerto Rico, and the US Virgin Islands. For example, a company charter in California would be a foreign insurance within the state of New York. So it's still within the country, but like Primerica is a foreign here in Florida. See what I'm saying? So Primerica home office and its incorporated office, it's in Georgia. So they started a company in Georgia, their home office is in Georgia. So it's domestic of Georgia, but it's doing business in Florida. So here in Florida, it's considered a foreign company. It is allowed to do business here because they have a certificate of authority here in the state, but it's a foreign company to Florida because it's registered and its home office, it's in another state.
Okay,
Okay.
so we were in Florida, let's say North Carolina, whatever, that's gonna be foreign,
Mm-hmm.
like Texas, other states.
You're a foreigner, yes. So like, for example, take your company, right? M&T Designs, right?
Mhm.
So you're domicile, so you're domestic here in Florida.
Okay,
If you do designs in Puerto Rico, that you're foreign in Puerto Rico
okay,
because your business is registered here in Florida.
okay.
So that's just what it means. It's and then an alien insurer is an insurance company that is incorporated outside of the US. So if you're a company in Canada and you come and do business over here, you're an alien.
Okay.
So it's the like me, I'm an alien. So
I'm a foreign.
yes, you're foreign. Exactly. There you go. There you go. There you go. There you go. And now well, no, my kids are not. Your kids are domestic. The 2 babies are domestic. Talking to Ellie, her 2 babies are domestic because they were born in Florida.
Okay.
And your husband is domestic because he was born in Miami. Okay. Then all of you guys are foreigners because you are from New York. So you're foreign to Florida. And then I'm an alien because I was from somewhere outside the company. I mean, outside the country. And just thinking as us as companies, right? Like if we were companies, basically, right? So, okay, perfect. So we got that.
Yes.
Ownership. Stock companies are owned by the stockholders who provide the capital necessary to establish and operate the insurance company and who share in any profits or losses. Officers are elected by the stockholders and manage stock insurance companies. Traditionally, stock companies issue non-participating policies in which policy owners do not share in profits or losses. Non-participating stock policy does not pay dividends to policy owners. However, taxable dividends are paid to stockholders. The dividends are not guaranteed as they are based on company profit. So stock companies are owned by the stockholders. And I think we saw one of those questions yesterday.
Yeah.
So those are owned by the stockholders. Mutual companies are owned by the policy owners and issues participating policies.
Okay.
So stock companies are owned by the stockholders. Mutual companies are owned by the policy owners and issue participating policies. So stock companies, they do not, traditionally stock companies issue non-participating policies in which policy owners do not share any profit or losses. So if the company in which we have stocks in lose money, we don't lose money. We lose money if the stocks go down, but we wouldn't lose the losses that they have. Now, mutual companies, they're participating companies. They're owned by the policy owners, and with participating policies, policy owners are entitled to dividends, which in the case of mutual companies are a return of excess premiums and are therefore non-taxable. Dividends are generated when the premiums and the earnings combined exceed the actual cost of providing coverage. Creating surplus, dividends are not Dividends are not guaranteed. So one thing they both have in common, dividends are not guaranteed.
Yes.
Okay. Something they have different is that ownership is that stock companies are owned by the stockholders and mutual companies are owned by the policy owners.
And then on stock companies, they're taxable and mutual is not taxable.
Taxable dividends are paid to stockholders, and then dividends are not guaranteed. Return of excess premium. Taxable are paid. Yes, stock companies have taxable dividends and mutual funds have non-taxable dividends.
Okay.
All right. Mutual companies.
Mrs. Smiley sent her teenage son Spencer to a grocery store. She gave him $40 and a list of things to buy. Spencer brought back the groceries and gave his mother back the money that he didn't use, $10 in change. If this was a mutual company, the $10 would be considered a dividend or a return of unused premium.
That clarifies it more, right? So that's the excess premium, that's the dividends. However, dividends are not guaranteed, okay? So a fraternal benefit society is an organization formed to provide insurance benefits for members of an affiliated lodge, religious organization, or fraternal organization with a representative form of government. Fraternal sells only to their members and are considered charitable institutions and not insurers. They are not subject to all regulations that apply to insurers that offer coverage to the public at large. In most states, fraternal benefit societies are permitted to issue life insurance, including endowments, health insurance, including medical and disability, and annuities. They do not issue property or liability policies. So a fraternal benefit society, it's an organization, not a company. It's an organization formed to provide insurance benefits only for their members. So it could be a religious organization. So it could be, I don't know, any of the churches that have their own organization, and then, you know, they form with the sole purpose of giving insurance to their members. If you're not part of their members of their group register, you cannot buy that insurance policy. And that's why they're not regulated or, you know, based on all the regulations that all the other companies have, because they don't offer the insurance at a mass. They only offer, like at masses of people, they only offer it to their members. Authorized versus unauthorized insurers and certificate of authority. So before insurers may transact business in a specific state, they must apply and be granted a license, which is a certificate of authority, from the State Department of Insurance and meet any financial, capital, and surplus requirements set by the state. Insurers who meet the state's financial requirements and are approved to transact business in the state are considered authorized or admitted into the state as a legal insurer. Those insurers who have not been approved to do business in the state are considered unauthorized or non-admitted. Most states have laws that prohibit unauthorized insurers from conducting business in the state, except through licensed excess and surplus line brokers. So something important to remember, insurers must obtain a certificate of authority prior to transacting business in the state. So unlicensed entities, an entity that is required to be licensed or registered with the Florida Office of Insurance Regulation, but that is operating without the proper authorization, is identified as an unauthorized insurer. All persons have the responsibility of conducting reasonable research to ensure they're not writing policies or placing business with an unauthorized insurer. So unlicensed entities are basically the entities that come from other states, but they're not licensed here. Okay. The purpose of insurance regulation is to protect the public interest. So the reason I said this, and let me highlight it, it's because I've seen this in a question. So what's the purpose of an insurance regulation? Is to protect the public interest. They may ask you, like, are they to protect the insurance company? Are they to protect the agents? Are they to protect the policies? But they're there to protect the public interest. One of the insurance regulators' main concern is with unauthorized entities transacting insurance in the state, which may cause any of the following problems: the potential for criminal activity within the insurance business, adverse economic impact, unauthorized insurers and insurance licensees, the potential for unpaid claims due to dishonesty and actual unsoundness, no state or federal guarantee fund to cover unpaid claims, and adverse economic impact on health cover providers from unpaid claims. I'm going to take a little screenshot of this graph because it's super helpful to have. Let me send it. They're having fun up there. So with this graph, is telling us basically what we saw before. Insurance companies have ownership, right? Either the stock or mutual. The stock ownership are owned by stockholders. The mutual companies are owned by the policy owners. And insurance companies also have domicile. They can be domestic. It's when they're doing business in the state that they are registered. Sorry, in the home state, yes. They can be foreign, meaning they're registered in one state and doing business is another. And they can be alien, meaning they're a company registered outside of the US. Now, insurance companies also have authority, which is admitted and authorized. Every time they change state or they add another state, they need to have a certificate of authority in that state. Non-admitted and non-authorized means the ones that are not licensed to do business in the state that they're trying to do business. Okay. I can see if, give me a second. Seems to be a long chapter, but I'm gonna stop there and just do like 3 questions. Just because it's a lot of concepts. Yeah. Okay. So all of the following would be considered an insurance transaction except soliciting a policy, advising a policyholder regarding a claim, negotiating negotiating coverage, or obtaining an insurance license. Ellie says D.
B. D?
D as in David. Yeah, that's what Ellie says.
Oh, obtaining an insurance license.
Yep.
Yeah.
Okay. So you shouldn't even be considered or doing any insurance transaction without your license and without being appointed in your state as well. So everything else, soliciting a policy, advising regarding a claim, and negotiating coverage, it's all considered an insurance transaction. I see. Okay. Which of the following is an agreement between an insured and an insurer where the insurer agrees to indemnify the insured for specific losses in exchange for a premium? Ellie says the insurance contract. What the heck? Tornado warning. Oh, sorry, guys. You got it too?
Yeah.
You live around here though, right? As well?
Yeah. Yeah.
Okay, that's, yeah. I'm like, wait, yeah, you live around here. Okay. So which of the following is an agreement? So un acuerdo entre el asegurador y el asegurado, o el asegurado y el asegurador, en el cual el asegurador está de acuerdo en indemnify, en pagar al asegurado por pérdidas en cambio de primas, o a cambio de primas. Damn, whoever hears that recording is gonna be like, she doesn't even speak Spanish. It was so chopped translation, man. So Ellie says the contract.
Identify the insurance for specific losses in exchange for premium. I'm gonna go with her.
Yeah, let's go with contract. That's good.
Is she scheduled?
We're about to do that right now because she was feeling sick, but we're about to schedule her right now. She won't be able to leave the state until she schedules and takes it. So when doing business in this state, an insurance company that is formed under the laws of another state is known as which type of insurer? A foreign, a domestic, an alien, or not admitted?
When you're in business in the state, an insurance company that comes under the laws of another, and that's foreign.
Right, perfect. What is a foreign insurer? An insurance with a home office in another state, an insurance with a home office in another country, an insurer with licensed agents doing business in other countries, an insurer with licensed agents who are citizens in more than one country.
Okay.
Hey, good job. Which of the following types of insurers is owned by the stockholders? Mutual, reciprocal, fraternal, or stock?
D as in dog.
Which of the following entities is not an insurer, but an organization formed to provide insurance benefits for members of an affiliated lodge or religious organization? A mutual company, stock company, reciprocal association, or fraternal benefit society?
D.
Good job. Okay, that was the same one. An insurer holds a certificate of authority in the state in which it transacts business is considered an authorized insurer, a local insurer, or a certified insurer, or a self-insurer.
An authorized insurer.
Good job. Which of the following is not? You look so cute, baby. Which of the following is not true regarding a certificate of authority? A, it is issued by the State Department of Insurance. B, it is issued to group insurance participants. C, it might be necessary for transacting business in a specific state. It is equivalent to an insurance license. So which of the following is not true?
B.
Look at you both. Let's see another one. Which of the following is another term for an authorized insurer? A, admitted, B, certified, C, licensed, D, legal.
Licensed.
Okay, that's
Certified. I'm between certified and licensed.
yeah, I think it's admitted actually.
Admitted.
Let me go. I think so. Yeah. Insurers who
Is-
meet the state's financial requirements and are approved to transact business in the state are considered authorized or admitted. So let me do this. Okay. That's weird. To legally transact insurance in this state, an insurer must obtain which of the following? A, power of attorney, B, business entity license, C, certificate of insurance, D, certificate of authority.
Yes, and dog.
Correct. Same question asked differently. On a participating insurance policy issued by a mutual insurance company, dividends paid to us policyholders are taxable as ordinary income, guaranteed, not taxable since the IRS treats them as a return of a portion of the premium paid, or D, paid at a fixed rate every year. On a participating insurance policy issued by a mutual insurance company, dividends paid to policyholders are
Not taxable.
You both say C. You're both right. Maybe can I get a cup of water with ice, please? Okay, so this
Some water, please.
chica, yeah. All right, perfect. And so I
Well, I'm not
think,
as fancy as you.
you know, it's weird because sometimes I need just room temperature water, and other ones I crave the ice water.
Yeah.
So reinsurance or insurance for insurers. So seguros para los asegurados. No, I was just, that's basically all it means. A reinsurance is insurance for the insurer. It's a form of insurance whereby one insurance company, the reinsurer, in consideration of a premium paid to it, agrees to indemnify another insurance company, which is the ceding company, for a part or all of its liabilities from insurance policy. It says, from
Okay, I'm confused on that one.
insurance policies it has issued.
Can you read that one again?
So a form of insurance whereby one insurance company, which will be the reinsurer, in consideration of a premium paid to it, agrees to indemnify another insurance company, which is the ceding company, for part or all of its liabilities from insurance policies it has issued. So es como que un reaseguro o un reasegurado.
Okay.
Pero es una compañía le paga a otra compañía. So it's a contract under which one insurance company,
Una compañía está asegurando la otra compañía.
So it indemnifies another insurance company for part or all of its liabilities. So no es como que le está asegurando, pero como que le está taking part of the risk. So the purpose of the reinsurance is to protect insurers against catastrophic losses. Catastrophic. Oh, that sounds better. The originating company that procures insurance on itself from another insurer is called the ceding insurer because it cedes or gives the risk to the reinsurer. The other insurer is called the assuming insurer or the reinsurer. So le está dando o cediendo, like this ceding, es ceder. Le está cediendo el riesgo a la otra compañía. Y la otra compañía está asumiendo el riesgo. So let's see. When reinsurance is purchased on a specific policy, it is classified as a facultative reinsurance. When an insurer has an automatic reinsurance agreement between itself and the reinsurer in which the reinsurer is bound to accept all risk ceded to it, it is classified as a reinsurance treaty. Treaties are usually negotiated for a period of a year or longer. So when they have a treaty, if there is a treaty between two companies, automatically, they automatically have to accept basically that the policy that they are ceding. Financial services regulation in 1998, Florida voters passed a constitutional amendment combining the offices of the state treasurer, who oversees the Department of Insurance and also serves as the state fire marshal, and the controller, who also serves as the head of the Department of Banking and Finances. So it's like one serves the other one, who serves the other one, who serves the other one. Beginning 2003, the duties and responsibilities of both departments fall under the new Department of Financial Services Department. So the state treasurer oversees the Department of Insurance and also serves at the state fire marshal and the controller. They're all como que todos combinados. Because that one also served as the head of the Department of Banking and Finances. But beginning January 1st, 2003, the duties and January 7th, 2003, the duties and responsibilities of both departments fall under the new Department of Financial Services. The department consists of 15 divisions and offices. The following 5 divisions are involved in regulating insurance. So these 5 you might see in the exam. So these 5 divisions are under the Department of Financial Services. So the Department of Financial Services oversees these 5 over here. Division of Accounting and Auditing, which is the Bureau of Unclaimed Property. Division of Insurance Agents and Agency Services. Division of Insurance Fraud. Division of Consumer Services, and Office of Insurance Consumer Advocate. I am going to do this part over here so you guys can see that this one, so this one are all under that one, basically. Hopefully that, espero que se entiende. Okay, I'm gonna do that. Financial Services Commission. Within the Department of Financial Services, the Financial Services Commission is composed of the governor, the attorney general, the chief financial officer, and the commissioner of agriculture. You will see this as a question as well. So the Financial Services Commission is composed of the governor, the attorney general, the chief financial officer, and the commissioner of agriculture. The commission is afforded the flexibility to organize the offices in any manner deemed appropriate to promote both efficiency and accountability within the department. The commission appoints or removes director by a majority vote consisting of at least 3 affirmative votes, with both the governor and the chief financial officer on the prevailing side. So if they both vote together, that's kind of like the side that wins. The major structural unit of commission is the office. The following 2 offices are established within the commission: the Office of Financial Regulation and the Office of Insurance Regulation, which specifically regulates the business of insurance in the state. So the major structural unit for the commission, those are the 2 offices that belong there. So the Financial Services Commission is composed by the governor, the attorney general, the chief financial officer, and the commissioner of agriculture. At the same time, those are the people, basically the main heads that compose the Financial Service Commission, the Financial Services Commission. But the financial services, the commissions in the office, the major structural unit of commissions in that office is basically 2, right? The Office of Financial Regulation and the Office of Insurance Regulation. So those 2 offices are established within the commission. ¿Se entiende? Okay.
Yeah, I understand that I'm looking at it. We'll see when they're asking the question.
When the test comes in, yeah. Again, I've highlighted that, but this chapter is we're gonna go through the breakdown as well when we're getting more like before we take the exam. but
Okay.
they get a lot of like questions from this one. Is it raining? Oh. The Office of Insurance Regulation is responsible for all activities concerning insurers, including licensing and certificates of authority, rates, policy forms, premium financing, claims, solvency, viatical settlements, administrative supervision, and any other related provisions of the insurance code. The Director or Commissioner of Insurance Regulation is the head of the Office of Insurance Regulation. So, the Office of Insurance Regulation takes care of all of that. The licensing, which we know for licensing is us getting licensed. Certificate of authorities is the companies coming and getting licensed to do business in the industry here. The rates, it helps regulate the rates for, for the whole insurance industry, the policy forms, the premium financing, the claims, solvency, and making sure a company has the money to go solvent if, 100% of the claims goes, to cash or something. Oh, the back door is open. That's why it sounds like that. Okay, I'm so sorry. It hears like it's raining right next to me, and it's because the back door is open. Okay. 3 deputy commissioners serve under the commissioner of the office as follows: the deputy commissioner for business development and market research, the deputy commissioner for property and casualty, and the deputy commissioner for life and health and for specialty. So again, this little thing, I'm gonna take another just to make sure you guys take note of that. Oh, hold on, let me do this. Okay, the Office of Financial Regulation is responsible for all activities of the Financial Services Commission relating to the regulation of banks, credit unions, finance companies, and securities industry. The Director or Commissioner is also the head of this office, known as the Commissioner of Financial Regulation. The Office of Financial Regulation includes the Bureau of Financial Investigations that functions as a criminal justice agency and conducts investigation within or outside the state as deemed necessary to aid in the enforcement of state laws. If during an investigation, the office has reason to believe that any criminal law of the state has or may have been violated, the office may refer any records pertaining to the violation to the state or federal law enforcement or prosecutorial agencies, and will provide investigative assistance to those agencies as required. So if we backtrack a little bit, Financial Services Commissions is composed of Governor, Attorney General, Chief Financial Officer, and Commissioner of Agriculture. Now that office has 2 offices within it, which is the Office of Financial Regulation and the Office of Insurance Regulation. The Office of Insurance Regulation is responsible for all activities concerning insurers, los asegurados. No, aseguradores, right? Insurers? Aseguradores, right. So the licensing, the certificate of authority, the rates, the policy premium, everything an insurance company needs to work and be kind of successful and things, all that, it's the Office of Insurance Regulation. Now, the Office of Financial Regulation, that's the one that regulates the banks, the credit unions, the finance companies, the securities industry. Okay, so Director of Commissioner is also the head known as the Commissioner of Financial Regulation. The Office of Financial Regulation includes the Bureau of Investigations. So if they find that somebody messed up on security license, like not security license, but like any kind of investments or committed fraud or things like that, then they bring it up to the state or federal level, depending what they find, and they aid in that investigation. So that's all that it is. But as long as you understand, Financial Service Commission is composed of those 4 key people, and then it has the Office of Financial Regulation and Office of Insurance Regulation within the Financial Services Commission, then you'll be okay. Now, if they talk about Office of Insurance Regulation, it's exactly what it says. It regulates the insurance industry. The Office of Financial Regulation regulates the financial industry. I think that's kind of an easier way to explain it. Okay. Chief Financial Officer. Insurers laws in Florida are administered by the Chief Financial Officer. So now we're talking about the laws itself. So, okay. So they're administered by the Chief Financial Officer, the Financial Services Commission, and the Commissioner of the Office of Insurance Regulation. Okay, so they are administered by more than one. Hold on, let me. Okay. The insurance laws in Florida are administered by the Chief Financial Officer, the Financial Services Commission, and the Commissioner of the Office of Insurance Regulation. The CFO is independently elected and serves as the head of the Department of Financial Services and as a member of the Financial Services Commission. The CFO oversees all 15 divisions and offices of the department. The CFO also has the authority to issue subpoenas, administer oaths, and examine witnesses when examining investigating any person implicated in an account, claim, or demand against or by the state. Related costs incurred this, sorry. I didn't click that. Related costs incurred by the CFO or the department will be charged against the subpoenaed person, and failure to comply with such order will be a contempt of court. So the CFO is basically the head of everything we just saw before, kind of to keep it clean. Now, but this graph will explain it. You can go through it. You don't need to memorize it, but you do need to understand it. Okay. So Department of Financial Services es lo que estábamos viendo antes. That one, it's head by the CFO. That's its main guy in there or girl. It oversees 15 divisions. These are the 5 that are related to the insurance company or to the insurance, which is accounting and auditing, insurance agent and agency services, insurance fraud, consumer services, insurer consumer advocate, and it has the Financial Services Commission, which is the members are the governor, attorney general, CFO, commissioner of agriculture, and the duties is to organize the offices and appoint director. And then you have the 2 offices underneath the Department of Financial Services. And then it has the bullet points of what each of those do or oversees. I like it that it's in one view right now. So let me go ahead and do that. Okay. Department of Financial Services. The main purpose of the Department of Financial Services is to enforce the provisions of the insurance code and to execute the duties imposed upon it by the code. General powers and duties of the department include the following: conduct investigations of the insurance matters as deemed appropriate, collect, propose, publish, and disseminate information relating to its duties imposed by law, employ actuaries, and be at-will employees serving at the pleasure of the Chief Financial Officer, and adopt rules to implement provisions of law conferring to the department's duties. Let's go through a little bit more. So consumer services, the Division of Consumer Services responds to complaints by consumers. It's exactly what it's saying. It's like customer service. They're under the direct supervision of the CFO. On claim properties, in order to file claims as a claimant's representative, you need to acquire ownership or entitlement to unclaimed property and receive a distribution of fees and costs from the department. Private investigators, certified public accountants, and attorneys licensed to practice in the state of Florida must register with the department's Bureau of Unclaimed Property. Do you guys know what unclaimed property is? So unclaimed property is literally, so let's say you work for a company and you ended up quitting or leaving, and you have 2 days that you never got paid for, or you never went back because you were so mad at the boss or something. It was only like $50-$80 that you were going to get, that you were like, F it, it's not worth the seeing them. The company is required to file that with the unclaimed property department, put your name, your social, and that you have that money that you have not claimed for. So then you can go on a claim or there are companies out there that will kind of do these investigations and see who has what. And then they'll reach out to you, hey, like I can get you this money for X amount of fees. And they go and get it. But there's also a free state website that you can go and see if you have anything that you have not claimed, which is cool. But that's the Department of Unclaimed Property. So that's just one example, basically a paycheck. Yeah, it's super cool. We have to file, every company has to file that once a year. And I remember working at the other company, I had like a stack of checks every year with people that did not come and claim their checks. Some of them were $300, some of them were $5, whatever it was, but it was money. Receivership, each agency is required to exercise due diligence within its lawful powers to secure full payment of all accounts receivable and other claims due to the state. So should any agency negotiate a proposed settlement agreement as to a delinquent account receivable prior to the required date of transfer to the department for collection, the agency must submit the proposed settlement agreement to the department for approval prior to execution. This sounds like collection companies. The nature of the transaction or events, yes, that is the nature of the transactions or events that created a debt to the agency. A brief explanation why the settlement is proper under the circumstances, and any other information that the department may require to properly perform its duties. The department will review information submitted with the proposed or provisional settlement agreement and recommend to the chief financial officer actions to be taken. But this is, it looks like it's Department for Collection. Okay. Insurer and anti-fraud plans. Insurers are required to file with the Division of Insurance Fraud anti-fraud plans that include a written description. Sorry, my throat was coming. That light they have over there is super, ¿sí te das cuenta? Super bright. So I'll leave that. I'm pretty sure you guys have read all of that. In there, it's basically what it says. Office of Insurance Regulation, CFO, along with the Office of Insurance Regulation, are concerned with regulation of the insurers and their agents. So Office of Insurance Regulation se preocupan de regular las aseguradoras y los agentes. So the organizing and licensing of companies, including establishment and the initial financial requirements, policing against unauthorized insurance activities, continuing regulation of insurance companies and activities. So todo lo que tenga que ver con las aseguradoras y los agentes, the Office of Insurance Regulation, it's what will regulate that. Market conduct examinations and investigations of insurers. This is, you see all these little like bold letters in here? Most likely you'll find them. So just make note of them. The CFO and the Office of Insurance Regulation have the right to examine the affairs of every person or entity authorized to transact insurance in this state. The purpose of the examination of insurers' books and records is to ensure that the companies remain solvent and conduct business of insurance in compliance with the state laws and regulations pertaining to licensing, policy forms, rates, claim, and market conduct. So they have the right to examine the affairs of the persons or entities authorized to make insurance transactions within the state. Okay, the examinations must be conducted at least once every 5 years. We saw that in the question yesterday, that we thought it was 3 because we thought it was something else.
Yes.
Or as frequently as deemed appropriate by the office. So if the office is thinking, this company is iffy and they want to examine them every 12 months, they have the right to do so. So, but it has to be at least every 5 years, once every 5 years. Now, the cost of the examination is the responsibility of the insurance company being examined. So let's say I'm an insurance company and I get examined every year. I have to pay the state for that examination. I know, huh? Okay. In lieu of examination of foreign and alien insurers, the office may accept an examination report from the accredited departments of insurance of their states of domicile. So whatever is their home office, If they were examined there, the state over here can accept the reports from that examination, so that they don't have to examine them every 5 years. They can just accept that paperwork. If there is a reason to believe that any person has violated any provisions of the insurance code, or upon a written complaint, the department will conduct an investigation as deemed necessary of the accounts, records, documents, and transactions pertaining to or affecting the insurance affairs of any agent, adjuster, customer, or service representative, or any other person. So we will conduct an investigation of everyone involved, and it will ask for records and things of everyone involved. Any person who obstructs the department, the office, or the examiner in the authorized examinations or investigations is guilty of a misdemeanor. So if they're asking you for something, you gotta give it to them. You gotta answer the subpoena, you gotta do all that, otherwise you'll be charged with a misdemeanor. And upon conviction will be subject to denial, suspension, or revocation of a license or certificate of authority and other penalties as provided by the insurance code. So the rule of the land is never lie for nobody. Always be transparent, be ethical, be morally correct. And like I said, if any company is under examination, you're one of their agents, provide any records that they're asking you for. Because if not, you're going to be charged with a misdemeanor, and then they're going to take your license away. Right? Cease and desist order. Because the department's role is to enforce insurance laws and to protect the public from unfair trade practices, if the department or office suspects that an insurer or licensee has committed a violation of any state insurance provision, statute, rule, or order, the department or office may issue a statement of charges and holds a hearing for any purpose deemed necessary within the scope of the insurance code. Again, so like before this part over here was just examinations that they can do. So if they're asking you for something, you can do something. Now, if they find you guilty of anything, or they realize you've conducted or violated, then they are going to issue, I'm pretty sure it's a cease and desist. So if no hearing is requested within the time allowed by the insurance code, or if a hearing is held and the department or office finds that any of the charges are proven, they may enter an order directing the licensee or the affiliated party naming the complaint to cease and desist from engaging in the misconduct. So cease and desist basically means you gotta stop doing what you're doing. So that's it. A person who violates a cease and desist order of the department or office will be subject to the following penalties. So violating a cease and desist means they've told you already you're not allowed to conduct that type of business, and you keep doing it, then you can get a monetary penalty of up to $50,000. Suspension or revocation of the person's licensee or certificate of authority, and or any other relief as provided in the insurance code. These penalties, you have to memorize it. If you violate it, so let's go back up a little bit. So we went through the Office of Insurance Regulation. Okay. So the CFO and the Office of Insurance Regulation have the right to examine all the affairs for insurance policies, any regulations, or anything like that. Examinations must be conducted at least once every year, or as deemed appropriate by the office. Any fees related to those examinations have to be paid by the insurance company. Any foreign and alien companies can just give them the reports of examination from the departments. If you are found guilty, if you don't obey with investigators or don't help them, or any of that stuff, you can be found guilty with a misdemeanor, and you can have a denial, suspension, or revocation of your license or certificate of authority. Now, cease and desist order, if after a hearing of the previous found kind of charges, you have a hearing to kind of prove them wrong, but they still found you did something guilty, and they order a cease and desist, and you violate it, then you can have a penalty of up to $50K. You're going to have a suspension or revocation of the license or the certificate of authority, and any other relief as provided in the insurance code. So keep in mind, 5 years, like examinations are every 5 years at least. Another thing to keep in mind is they can issue a cease and desist. If you violate the cease and desist, you have a penalty up to 50,000, or they can take your license away if you're an agent. If you're an insurance company, they can take your certificate of authority for that state. Okay. Agency actions, administrative enforcement guidelines. So any service required or authorized to be made by the office under the financial institutions codes may be made by certified mail, return receipt requested, delivered to addressee only, personal delivery, or other means in accordance with the code. Good faith, okay. Policy approvals, rates, and forms. The purpose of rate regulations is to promote the public welfare by regulating insurance rates in order to assure that they are not excessive, inadequate, or unfairly discriminatory, and to authorize and regulate cooperative action among insurers and in rate making. Florida Insurance Code requires insurers to file their premium rates with the Office of Insurance Regulation. So take note of this. The Florida Insurance Code requires insurers to file their premium rates with the Office of Insurance Regulation. So cada aseguradora allá afuera has to have filed their rates with the Office of Insurance Regulation. Rate filings must be accompanied by supporting information used to establish the rate. And then the office has authority to supervise the rate making. The Office of Insurance Regulation has authority to approve all policy forms. Prior to the use of any policy or contract form, application form, rider, or endorsement, insurers must submit the forms and all changes to the office. So cada formulario que nosotros usemos también tiene que ser aprobado por la Oficina de Insurance Regulation. Now, things to keep in mind. All forms must be filed at least 30 days in advance of their use or delivery. At the end of the 30-day period, the forms are deemed approved unless disapproved by the office. Okay, so if an insurer wants to have any form approved, they have to be filed at least 30 days prior to when they want to use them. If they file them within 30 days and they didn't hear anything from the department, they're automatically deemed approved unless they receive something saying that they were rejected. Licensing. One is the purpose. Insurance professional must be properly licensed for a specific line of authority in order to transact insurance. The purpose of licensing is to ensure that a producer meets educational and ethical standards. So basically what we're doing now. No person may act as or advertise or hold himself or herself out to be an insurance agent or customer representative unless he or she is currently licensed by the department and appointed by one or more insurers. So they need to be licensed in order to be even talking about insurance or saying, hey, I can help you with insurance. They need to be licensed in order to have that conversation. There we have license types. The agents. An insurance agent is a person authorized by an insurer, fraternal benefit society, or health maintenance organization to solicit, negotiate, and obtain insurance or annuity contracts. We are agents. So we represent el asegurador, no el asegurado. Like we represent the company that we're working for, basically. That's why it's very important to kind of do research on the companies that we're working with and then see if we're going to back them up, like if we have the same goals and morals and ethics and all that. In this state, the term agent includes a general lines agent, life agent, health agent, or title agent. It also includes an insurance producer, but not a customer service rep, a customer representative, limited customer representative, or service representative. Se me está trabando la lengua. Life agent.
Can we do some practice questions?
Yes, I'm going to finish the license types and then we're going to go up and do questions. Because I just saw it también. ¿Dónde está la cosita cuando estoy scrolling down? I'm like, ooh,
No, but it's, oh, wow.
Yeah, it's right. Y este es más como que memorizar, pero al mismo tiempo entender cómo funcionan los departamentos.
Sí.
So it's gonna take a bit, and don't feel bad if you don't get it at first or it takes you a little bit long. My advice is after we do the chapter and we do the quiz, just go back and do quizzes. The more quizzes you do for the chapter, the better you're gonna feel. Okay, so we had done that part. Okay, aquí nos habíamos quedado. An insurer that holds a certificate of authority in the state in which it transacts business is considered an authorized insurer, a local insurer, a certified insurer, or a self-insurer.
Authorized.
Authorized insurer, bien. Which of the following is not true regarding a certificate of authority? A, it is issued by the State Department of Insurance. B, it is issued to a group insurance participants. C, it might be necessary for a transaction, for transacting business in a specific state. D, it is equivalent to an insurance license.
B as in boy.
Perfecto. What method do insurers use to protect themselves against catastrophic losses? A, risk management, B, reinsurance, C, indemnity, D, pro rata liability.
B as in boy.
Reinsurance. Perfect. Which of the following entities is responsible for agent licensing and administrative supervision? A, the Office of Insurance Regulation, B, the Office of Financial Regulation, C, the Insurance Guarantee Association, D, the Governor's Cabinet. So which of the following entities is responsible for agent licensing and supervision administrativa?
B as in boy.
So remember when we're going over it, the Office of Insurance, and ya está aquí atrás, mira, the Office of Insurance, the licensing, certificates, rates, market, claims, solvency, viaticals, and then premium. And then the finance, this is agent licensing. So it's this one.
Okay.
So anything related to insurance license and certificates and rates and policies and forms and claims, todo eso es la oficina de reguladora del seguro. Which of the entities is, okay, we just saw that one. Which of the following is not a responsibility of the Office of Insurance Regulation? A, issuing certificates of authority. B, instituting legal proceedings. C, enacting new insurance laws. D, enforcing the insurance code. So which one is not the responsibility? So Ellie says C, enacting insurance. So enacting insurance laws is creating the insurance laws or proposing new insurance laws. So they have to enforce them, but they don't create them.
Gotcha.
Okay. What are the two offices of the Financial Services Commission? The Office of Insurance Regulation and the NAIC, the Office of Financial Regulation and the Office of Insurance Regulation, the Legislative Office and the State Court Office, the Department of Insurance and the Department of Finance.
B as in boy.
Yes, ladies. Perfect. What is reinsurance? A, an agreement between a domestic insurer and a foreign insurer. B, an agreement between an insurer and an insured. C, an agreement between a sitting insurer and an assuming insurer. D, an agreement between an originator insurer and a sitting insurer.
D
originator and seating. So originating, insurer, and seating is the same one.
Okay.
So it's sí, lo cedes y lo asumes.
Assume.
El original, tienes que hacer el original in order to cede them, in order to cede the insurance.
Okay.
So es sí. Let's see one more. Which one of the following is another term for an authorized insurer? Admitted, certified, licensed, or legal?
Admitted.
Good job. An insurer that holds a certificate of authority in the state in which it transacts business is considered an A, authorized insurer, B, local, C, certified, or D, self-insured.
A.
Good job. You think so too? I agree. What method do insurers use to protect themselves against catastrophic losses? Risk management, reinsurance, indemnity, or pro rata liability?
Insurance.
Yeah, I was just Julian is like answering, like he's feeding, and as soon as I finish asking a question, he stops and he gives me like like if he's answering the question.
I can't hear them.
He's like so cute. You're so cute. I know. What is reassure? Well, we just saw this one. Why does it keep asking the same thing? Okay. How often must domestic insurance companies be examined by the chief financial officer in Florida?
Yes, and cat.
Okay, perfect. Ellie says 5 años. Yeah, your mama was right. Who examines the books and records of insurance companies in Florida? A, the chief financial officer. B, the NAIC. C, commissioner of insurance. D, the governor. Which one did you say?
The commissioner of insurance.
Ellie says the CFO. What do we go with?
What she said?
The CFO. The A. She says apples. And you say cats. So it's the
Josh says A. You're right, bitch.
what are the 2 offices of the Financial Services Commission? And we just saw that one. Let me just click it for the video. And yes. Okay. Which of the following entities is responsible for agent licensing and administrative supervision? Office of Insurance, Office of Financial, the Insurance Guarantee Association, or the Governor's Cabinet? I think
Yeah.
that we just saw this one, right? The Office
Yeah.
of Insurance. There we go. The Office of Insurance Regulation is responsible for all of the following insurer activities except bilateral settlements, policy forms, premium financing, and issue of securities. Or like A, B, C, D. Let's go to the graph. Hold on. No, it has bilaterals in there. Mhm.
I think the securities, because I didn't see that on the graph. Where's my phone?
Mm-hmm. Yeah, it's the securities because that's the financial. So all the other ones, bilateral settlements, policy form, and premium financing have to do with insurance. Securities, even though sometimes it gets confusing because you have insurance with securities part of it, but securities, that part is regulated by the Office of Financial Regulation. So that's no, okay. To legally transact insurance in this state, an insurer must obtain which of the following? A, power of attorney. I said eternity. I was thinking of paternity. Power of attorney. B, business entity license. C, certificate of insurance. D, certificate of authority.
Certificate of authority.
Yes, my ladies. How often must domestic insurance companies be examined by the chief financial officer? Well, it's every
They're
5.
repeating themselves out again.
I know, right? It's like, we just saw a couple of this. An insurer that holds, okay, we just saw that one too. No insurance policy form can be issued, delivered, or used in this state unless it has been developed by the CFO, filed with and approved by the Office of Insurance Regulation, reviewed by the Office of Insurance Regulation and approved by the governor, or approved by the Office of Financial Regulation.
I'm gonna go
So-
with C.
So the office, no insurance policy form can be issued, delivered, or used if it has not been
I don't know.
B, filed with and approved by the Office of Insurance Regulation. That's the one that we said, they file it and they have to file it 30 days prior to when they want to use it. And then if by day 30 or 31, they haven't heard anything from the Office of Insurance, that means it's approved.
Okay.
That's what I'm saying. How often must domestic, caramba. Just burp. Who examines the books and records? I was a CFO. But I think I'm going more down than what we did. Y me está dando las mismas preguntas. Yeah. There you go. An applicant for a life agent license may obtain a temporary license for a maximum period of 3 months, 6 months, 12 months, or 24.
6 months.
It's right above it, right? Or did you guys remember? I just remember 6.
Oh, I didn't see that. No, I think Ellie said it yesterday, or she asked about it, and we were talking about it at the table.
Nice. So ya para esta parte no lo hemos visto, so let me. Okay, license requirement, qualifications, application, and examination. So in order to have a license, you have to be competent, be trustworthy. That's why I do all these checks. You have to be a natural person, obviously, like a company cannot have a life agent license. It has to be a person that gets their own licenses. You need to be at least 18, be a US citizen or legal alien, authorized to work in the United States, a resident of Florida if you're working here. So if you're trying to, you can have a license somewhere else, but then you have to apply to be licensed here in Florida. You can't work for the Department of Veterans Affairs or State Service Office. You cannot work for a funeral home. That's conflict of interest. Or like a burial site, that's conflict of interest as well. You have to have completed the required licensing education and passed the examination for each license. And note, the applicant may not take the same licensing examination more than 5 times in 12-month period. That means you can only fail 4 times. But don't worry, because you guys are not gonna fail when you go and sit down for the exam. And you pay the required fees. Licensed agent in good standing in another state may apply to the department to have the license transferred to this state to obtain a resident agent license here for the same line of authority. The agent must also meet the following requirements. They have to become a resident of the state, being licensed in another state for a minimum of 1 year immediately preceding the application with Florida. They have to submit an application, which must be received within 90 days after becoming a resident. They have to submit a certificate from the home state identifying the type of license, submit a set of fingerprints, satisfy the pre-licensing education, and satisfy the examination requirements. Unless exempt. So sometimes there are states that have an exam that's similar to Florida, and they will kind of validate. If not, they have to take like an extra one. An applicant for a license must be qualified as to knowledge, experience, or instruction in the business of insurance. This includes the following: successful completion of a pre-licensing education course in insurance approved by the department. So it's 40 hours for single life, or health licenses in 60 hours for a combination of life and health. Hold an active license in life or life and health, insurance in another state, and employment by the department for at least 1 year, full-time life or life and health insurance, regulatory matters, and who has not terminated by the department. Application for examination must be made within 90 days after employment ends. So you either take the classes, hold a license in another state, or you're employed by the department for at least a year. He has such a happy face. So one thing, if you're in the military and you obtain a license and appointment as a life agent, you must maintain records, claim, and information facilities at a location accessible to the public. What that means is you cannot maintain those records on your military base house because nobody can get into the military bases. So it needs to be on a place where the public can go in. And agents, if you're military, you're not allowed to sell insurance policies, contracts, or certificates to any active duty military person or their families of a lower rank or pay grade. So if you're E3, you cannot sell policies to an E2 or an E1. It has to be your same rank or higher. And that is because military, we know they're disciplined, they do everything their superiors say. And because of that, they don't want any corrosion or like they felt pressure because they can't tell their superiors no. So for that same reason, they can only sell to the same rank or above. Then an applicant for a life agent license may obtain a temp license for a maximum of 6 months. So if they pass the exam and get appointed with those 6 months, that temp license will terminate and they'll have their full license. Exemption for licensing. An insurance producer license is not required of any officer, director, or employee of an insurer or organization employed by insurers, provided they're not directly or indirectly involved with the actual sale of an insurance contract and do not receive any commission. So rule of thumb, if you're gonna receive commissions from any sale of an insurance policy, you need to be licensed. But if you have like an insurance company, right, or your brokerage, and you have un asistente or a rep or a front desk person that's managing the appointments, and that person is gonna get paid by the hours or a salary and not directly commission from anything you sell, then that person does not need to be licensed. And that basically summarizes all of these points over here. Literally, if you're like director, you see like managerial, clerical, assistant, secure furnishes information for group insurance, mass market casualty insurance, and employer, yeah. So as long as they're not getting any commissions from the sale, they do not need to be licensed. Now, we all know we need background checks. We cannot have any felonies, and we need to have fingerprints with the states to make sure there is no criminal records. Maintaining a license. An agent's license remain in effect unless revoked or suspended and may be continually renewed as long as the agent pays the required fees and meets continuing education requirements. Continuing ed, you will be asked this in the exam. So let me highlight this part. In Florida, agents licensed for less than 6 years must complete a minimum of 24 hours of continuing education every 2 years in courses approved by the department. Out of the 24 hours, agents are required to complete a 4-hour law and ethics update course that covers insurance law updates, ethics, disciplinary trends, and case studies, product suitability, and other insurance-related topics required by the department. Agents who have been licensed for a period of 6 years or more must complete 20 hours every 2 years, including 4 hours of law and ethics update course. So whether you're less than 6 years licensed or more than 6 years, the hours is still include 4 hours of law and ethics. But if you have less than 6 years being licensed, you need your continuing education of 24 hours every 2 years. So you can do 12 hours each year. You can do 24 the second year, whatever it's more convenient. If you have a license for more than 6, then you only need 20 hours. A licensee who has been licensed for 25 years or more and holds a CLU or a CPCU designation or an undergraduate degree in risk management and insurance must complete a 4-hour law and ethics updated course and 6 hours of elective credit for a total of 10 every 2 years. So the more years you have in the industry, the less hours you're required. For good cause shown, the department may grant an extension during which the continuing education requirements may be completed for up to 1 year. So si pasaron los 2 años and something happened, you couldn't get it done, you can apply for an extension and they're going to extend it for another year. But you need to get it done, because if you don't get it done on that year, then it's like, again, I'm going to send this to the chat because this is something I can guarantee you're going to see on your exam. I'm even gonna go down that, but specifically actually this part over here. I guarantee you're gonna see it. Okay. So then you have the non-resident who completes the requirement and his or her, like technically if you're a non-resident, if you hold a non-resident license, you need to stay active in your state of residency. So if you complete your continuing eds on that state, you just have to show them here. If you have a state that does not require continuing ed credits, then you have to meet the Florida CA requirements. Following course may be completed in order to meet the requirements. This is just a list of courses. I don't remember them asking me for the list of courses in there. No, you'll be fine, most likely taken away if you don't do your continuing eds. Because continuing ed is to keep your license active. So if you don't do them, you can't keep it active. Okay, to renew or reinstate a license, a person must comply with their continuing ed requirements. An agent may not renew a license if the agent has not had his or her CE requirements certified, and an agent may not receive a new appointment if he or she does not complete CE for a previous license, if the previous license was not renewed because of failure to complete CE. So just what you were asking me. Communicating with the department. Esto también lo van a ver. Every licensee must notify the department in writing within 30 days after a change of name, resident address, principal business, street address, or mailing or emailing address. So any changes, what?
Remember yesterday I said 15, it was 30.
Yes. Any licensed agent who has moved his or her residence from Florida must have his or her license and all appointments immediately terminated by the department. So if we got licensed here in Florida and then we move somewhere else, we don't have 30 days. We have to terminate it like now. Yeah.
So if we move, we gotta forget about Florida.
Forget about Florida. Yeah, I mean, if you move but you still want to do the same industry, you just have to change it to a non-resident. So you have to like let them know like, hey, I no longer will be a resident of Florida. If the department is not notified, within the required time period, a maximum fine of $200 will be imposed for the first offense. For subsequent offenses, the agent will be subject to a minimum fine of $500 or suspension or revocation of the license. So again, you have 30 days to let them know of any changes. For example, if you get married and you change your last name, you have 30 days to let them know that your last name is now something else. If you move from your house to another one, buy a house, move apart, whatever it is, you have 30 days. If you do not, let's say you got married and now you move to a new house and you forgot to tell them, you'll be charged $250 for not telling them you changed your name. And then a minimum of $500 for not telling them you moved from your home. So right there is $750. All right, so criminal and administrative actions. Agents must notify the Department of Insurance in writing within 30 days after being found guilty or pleaded guilty or no contest to a felony or a crime punishable by imprisonment of 1 year or more in this or any other state. An insurance producer must report to the director any administrative action taken against the producer in another jurisdiction or by another governmental agency in this state within 30 days of the final disposition of the matter. The report must include a copy of the order, consent order, or other relevant legal documents. So
if they went to jail for 5 months, 6 months, it don't matter?
It don't matter.
It has to
But
be
if
a
you
year
got
or more?
charged, if you were found guilty or no contest to a felony of a crime or a crime punishable by imprisonment of 1 year or more. So if you were charged with a misdemeanor and you went to jail for 12 months and 1 day, you have to let them know.
Okay.
But if you were found guilty of a felony and if you were found guilty of a felony, whatever felony it is, you have to let them know. But if it's like a misdemeanor and it's less than a year, then you're not required to let them know. But anything more than a year, you are. Same thing with the insurance producer. They have to report any administrative action. So if your company has any action towards you, they have 30 days to let them know as well.
Okay.
Suspension, termination, revocation of license. A licensee may have his or her license suspended, terminated, or revoked if found to have been guilty or pleaded guilty or no contest to a felony in this or any other state. You can be in Hawaii, Alaska, Puerto Rico, like any other place. It still counts. Operated the agency or permitted the agency to be operated in violation of the insurance code. Solicited or handled controlled businesses. Misappropriated, converted, or unlawfully withheld monies belonging to the insurers, so fraud. Unlawfully rebated or attempted to unlawfully rebate or divide or offer commission with another. You see what I mean in there? Your license can be revoked if you want to be super friendly with somebody and be like, hey, get me clients and I cut you in on the commission. You can lose your license by doing that. Misrepresented any insurance policy, violated any provisions of the insurance code, violated any lawful order or rule of the department, engaged in unfair methods of competition or unfair acts or practices as prohibited by the code, willfully overinsured any property insurance risk, or demonstrated lack of fitness or trustworthiness to engage in the business of insurance. Number 5, appointments. An insurance agent or producer cannot legally act as an agent of an insurer unless they become appointed agent of that insurer. So when you pass a license and the state says, okay, now you're licensed with Florida, you cannot sell any policies until the company that's going to hire you appoints your license. Basically tells the state, hey, I am going to, how did he get that pen? I am going to hire this agent, and they do the appointment. All appointments will be submitted to the department on a monthly basis, no later than 45 days after the date of the appointment. And all appointments will be effective as of the date requested on the appointment form. Correct. So once you pass the license, you have to let Primerica know, hey, I took the exam, I passed the license, and then they will pull the records from the state. And they will tell the state, hey, this license is mine, basically. Like it's gonna be working with me. And then it takes like 24 to 48 hours after you pass. And then Pramerica will email you and tell you, hey, you've been appointed, you can now write business with us. And you'll notice because you go into the app and the app will look different. It will have the quick quotes and things like that because now you're able to do it.
Okay,
Um,
so do we call them or they contact us?
No, once you pass, you contact them and let them know, hey, I passed the exam.
Gotcha.
And I'll walk you through the process because then it's like an application and then you attach the record that you passed it and, you know, the fingerprints, receipt, like you attach all of that. And then they're able to do everything else. An individual who fails to maintain an appointment with an appointing entity writing the class of business listed on his or her license during a 48-month period will not be granted an appointment for that class of insurance until he or she qualifies as a first-time applicant. That means do it all over again. When a licensee's last appointment for a particular class of insurance has been terminated or not renewed, the department must notify the licensee that his or her eligibility for appointment as such an appointee will expire unless the agent is appointed prior to expiration during the stated 48 month. So basically, if you're not appointed, the state will tell you, hey, you are at risk of like losing your license within that 48 month, and they have to find somebody that will appoint them during that period. At any one time, the same individual agent may hold any or all categories for appointments for which he or she is qualified and licensed. However, an agent must have a separate appointment for each insurer. So the same individual agent may hold any and all categories of appointments. So if you have 5 licenses like life, securities, health, auto, and things like that, you can have all of them, but all of them needs to have their own separate appointment. So if Pramerica says she works with me, Pramerica needs to appoint all of your licenses. Or you're appointed here, you're appointed with Geico, you're appointed, you know what I mean? Like, but your licenses all needs to have its own individual appointments. Payment of fees. Appointment fees are non-refundable. However, if the applicant submits a written request within 60 days after the denial or disapproval of an appointment, the department will refund any state or county taxes received in connection with the application for the appointment. So even though they won't refund the application fee, they may refund the taxes portion of it, not the fee itself. Okay, so an insurer appoints producer to act as an agent and files notice or of agent appointment, pays appointment fees to a Department of Insurance. So this is a cute little graph to understand it better. We're kind of to know how it works. Renewal, continuation, termination, and transferability of appointments. Agent's appointments remain in force until suspended, revoked, or otherwise terminated. Revoked or otherwise terminated, they're subject to a renewal if a request is filed by the appointed entity in the appointee's birth month and every 2 years after that, and all appropriate fees and taxes are paid. An appointing entity may terminate an agent's appointment at any time, subject to an appointee's contract rights and with a 60 days advance notice. Once the appointment is terminated, the appointing entity must file a written notice with the Department of Insurance within 30 days. So a company can terminate your appointment and they'll need to let you know 60 days in advance. Like, hey, we are terminating your appointment with our company as of August 14, 2023. Once you've been terminated, you have to file a written notice with the Department of Insurance within 30 days after your termination. Unaffiliated insurance agents means a licensed insurance agent except a limited license agent who is self-appointed and who practices as an independent consultant in the business of analyzing insurance policies, providing insurance advice or counseling, or making specific recommendation or comparisons of insurance products for a fee established in advance by a contract signed by the parties. So you can have your license and be self-appointed, but that does not mean you're selling insurance. That means you're just advising on them. Agent responsibilities. So the fiduciary capacity. Although the agents act for the insurer, they are legally obligated to treat applicants and insured in an ethical manner. Because an agent handles the funds of the insured and the insurer, he or she has the fiduciary responsibility. A fiduciary is someone in a position of trust. More specifically, it is illegal for insurance producers to commingle premiums collected from the applicants with their own personal funds. So premium accountability, according to the insurance code statute pertaining to reporting and accounting for funds or premiums, return premiums, and other funds belonging to the insurers or other received by an agent, insurance agency, customer representative, or adjuster in transactions under the license are trust funds received by the licensee in a fiduciary capacity. So you can't have them under the same one. You can commingle them, and you are a person of trust when it comes to those funds. And those are considered trust funds, any premiums or fees like that. Agents, agencies, customer representatives, or adjusters who either temporarily or permanently divert or misappropriate trust will be subject to the following penalties. I'm going to take a screenshot of this table because I saw questions like that. I'll do this. Those penalties, you can memorize them. You might see one or two on the exam. So misdemeanor of the first degree, 300 or less, more than 300 but less than 20,000 is a felony of the third degree. Felony of the second degree is 20,000 but less than 100. Felony of the first degree is $100,000 or more. So that's the amount of funds they get, and then that's the penalty you'll have. Separate account requirements. An agent must keep the funds belonging to each insurer for which an agent is not appointed in a separate account to allow the Department of Office to properly audit such funds. The licensee in the regular course of business must account for and pay the same to the insurer, insured, or other person entitled to the funds. Commissions, compensations, and charges for extra services. So long story short, it's illegal practice for an agent to knowingly collect any excess charges for insurance, any sum collected as a premium or charge that is not provided for or due on the insurance policy issued by the insurer. That's considered excess charges. Controlled business is any coverage written on a producer's own life, health, or property, and or that the producer's immediate family or business associates. A licensee is not allowed to collect commissions on controlled business above the state-specific limit. Most states will not issue a license to a person if it is determined that the primary purpose of the license is to write controlled business. You will see this question, like, is it legal for somebody to get a license to only insure their family members? That's illegal. Like, you get a license basically to sell to the public. I know we work on referrals and we prefer to talk to somebody that we know because we understand the importance of being covered, but covering only our family members is not the right reason to get a license. It's actually illegal. Like, if you want to get a license just to cover your mom, your dad, your sister, your uncle, like, that's completely illegal. Let's look at this.
Tired of spending so much money on arranging insurance for the employees of his book publishing company, Mark decides to get a life insurance license, figuring that he can save money if he arranges all the policies himself. Mark thinks this will be a smart move because then he can also handle all the life and health policies for himself and his family. Unfortunately for Mark, all of this represents controlled business. And if the majority of Mark's commissions comes from controlled business, it is also illegal.
Mhm. So you might be the boss of the company or work in that company. You want to get licensed to help with that in your family. So you can do all that, but the main, if that's like the majority of the commissions, then that's illegal. If that represents like 10% of your commissions, 20% of your commissions, and everything else is through other channels, then that's good. But if you're only doing it for that sole purpose, then you can't do it. So in Florida, licenses commission from controlled business cannot exceed 50% of the aggregate amount of commissions and compensation received by the licensee within a 12-month period. So within a year, if half of your commissions came from your controlled business, your employees or your family members, then that's illegal. Okay. Record keeping as a means of regulating insurance companies and their agents, Florida statute provides the Office of Insurance Regulation with an absolute right to examine the affairs of every person. The law requires agents to maintain records of transactions for 3 years if the transaction pertains to premium payments. So if you're collecting information for insurance policies, and obviously those insurance policies and contracts, you're collecting premiums, you have to maintain records for 3 years. The beautiful thing is that we do all through the app, and in the app, everything is saved there, and we don't have any actual paperwork on our end. We submit everything to the app. We have everything on the back office that has all the records that we're doing there. Any document that they ask for and that we upload, it stays there. We don't need any files. But in the case of the exam, the law requires agents to maintain records of transactions for 3 whole years. Reply to DFS and the Office of Insurance Regulation. DFS is the Department of Finance Services. In the course of investigation of the alleged misconduct, the department or office may require the licensee to make books and records available for inspection for the purpose of such inquiries. The licensee must reply to the inquiry. So you're required to reply if they ask for something, and you're required to open your books, your files, your everything if they're asking for it. Ethics, market conduct describes the way companies and producers should conduct their business. It is a code of ethics for producers. Producers must adhere to certain established procedures, and failure to comply will result in penalties. Some of the market conduct regulations include, but are not limited to, the following: conflict of interest, a request of a gift or a loan as a condition to complete the business, and supplying confidential information. So producers are required to perform in a professional manner at all times. Professionalism means that a person is engaged in an occupation requiring an advanced level of training, knowledge, or skill. Being professional means placing the public's interest above one's own in all situations. Any deviation will result in a penalty. So we're in this business, even though we are to, what is it that the other line said? Como que somos representantes de la aseguradora, de la compañía, y no del cliente. But we're here to do what's best for the client. Per the policy, like following the policies, the rules, the code of ethics, the insurance, all that laws and regulation. But we're here to do what's best for them. There cannot be any conflict of interest, right? We can't request a gift or a loan to complete business. So if a person comes and says, hey, like, can I borrow a certain amount from you? Somebody that you know. And you're like, yeah, sure, but if you buy me a life policy, can't do that. So then we go into the code of ethics. Florida has incorporated the code of ethics into the insurance code with respect to trade practices and insurance underwriting. Do you guys remember how many hours of ethics do we need to renew? 4. Yes. The reason I asked that is because they're gonna ask you that like I think, I swear in my exam, I saw that same question like 3 or 4 times. Trade practices. The business of life insurance has been declared to be a public trust in which service of all agents of all companies have common obligation to work together in serving the best interest of the insurance public. Knowingly committing the offenses known as twisting or churning will result in an administrative fine of up to $75,000 for each willful violation. Whenever a life insurance agent submits a written proposal or program for any prospective client, such proposal should contain the following information: the company whose policy is proposed to issue, the date of the proposal, and the signature and address of the agent submitting it. So I don't think it gave us the definition of twisting and churning. Let's see if we're getting the information. So twisting is when you're twisting the policies, like changing from one to the other within the same company. Yes, and then churning is when it's from another insurance company. Let me see if it says here. Outside the company. By being probably. It just says a code of ethics specifically forbids agents of companies to engage in any of twisting, rebating, defamation, or misrepresentation. Okay, agent ethics. The licensed agents may not submit application to an insurer with which they are appointed or furnish a copy of an application to a prospective insured unless the name of the insurer is legible, type, license identification number of the agent. So it's just basically saying everything needs to be neatly typed and needs to include all of the applicant's information as well as your license number. And thank you, I was looking for that. NAIFA Code of Ethics. The National Association of Insurance and Financial Advisors is one of the oldest and largest trade organizations in the insurance field. Its mission is to advocate for a positive regulatory environment and promote professionalism and competence among insurance and financial professionals. So they promote the ethical conduct of its members. Okay, so they basically go over all of these ethics. These are the, what do you call, the principles an insurance agent should live by, and it includes all the ethics responsibilities in it. You can read it. Ethics for me is common sense, and I guess it's because my mind does not work in any other way that's not morally and ethically correct. So if you're here with me, I'm pretty sure we think the same way, and ethical will be something that's common sense. But if it's not, then you can just read that and make sure you understand the difference of what's ethical and what's not. Insurance guarantee fund, we're almost done with the portion of it. Insurance guarantee fund, the Florida Life and Health, so guarantee associations are formed to protect policy owners, insureds, beneficiaries, and anyone entitled to payment under an insurance policy from the incompetence and insolvency of insurers. So insurance guarantee funds are the ones that make sure they protect the one making the payments, los asegurados, los beneficiarios de la insolvencia de las aseguradoras. So what does that mean? If your insurance company goes broke, the insurance guarantee fund is there to protect and make sure you get the death benefit if need be. The Florida Life and Health Guarantee Association protects individuals who, on the date the insurer is declared insolvent and liquidated, resided in the state of Florida, and are policy owners or certificate holders of direct life insurance policies or health insurance policies, annuities, and supplemental contracts with or without life contingencies issued by persons licensed to transact insurance in the state of Florida. So if you got your policies from somebody that's not licensed, then you are not insured in the guarantee fund. Now, the purpose of administration assessment, the Guarantee Association maintains 3 separate accounts: the life insurance, the annuity account, and the health insurance account. So borrowing between the accounts for payments of claims and other obligations of the association is authorized at the discretion of the board of directors. Basically, each company can authorize the borrowing from the 3 accounts. Under direct supervision of the department, the la asociación is also subject to all applicable insurers laws and provisions of this state. The association is liable at most for the lesser of the following benefits: the contractual obligations of the insurer if it had not become insolvent, 100,000 in total net cash surrender and net cash withdrawal values for life insurance, 250,000 in net cash surrender and net cash withdrawals values for deferred annuity contracts, or 300,000 for life insurance death benefits with respect to any one life. So these are what the association will be liable for in case the company becomes insolvent. It is an unfair trade practice to make any statement that the insurer's policies are guaranteed by the existence of the Insurance Guarantee Association. The Florida Life and Health Insurance Guarantee Association Act implicitly states that no person who has the authority to sell insurance is allowed to directly or indirectly make, publish, disseminate, circulate, or place before the public in any form the advertised existence of the association as a mode to promote, induce, or solicit the potential insured to purchase any form of insurance. So what that basically means is that I cannot say, hey, come buy my insurance, because if anything, the Guarantee Association will make sure you get paid the death benefit. So I can't publicize that. Even though that's basically a law, I can't make that public. Because then I'm saying, hey, like, it's guarantee over there. Let me go over there, and I'm bringing them over here. When in terms, like, every single company has that same benefit. Okay, so unfair marketing practices. Insurers and insurance producers may not engage in any trade practice that is defined or determined to be an unfair method of competition. It is considered an unfair trade practice to knowingly commit an unfair method of competition or to engage in such actions with enough frequency that the commission of unfair marketing practices indicates a general business practice. And this way we have the little clause that we love. Yes. I love vocabulary. I don't know why. So misrepresentation. It is illegal to issue, publish, or circulate any illustration or sales material that is false, misleading, or deceptive as to the policy benefits or terms or the payment of dividends. This also refers to verbal statements. Committing this is illegal and it is called misrepresentation. I can sell a product saying, hey, dividends are guaranteed, you're gonna get it. Or my policy and my rates are the best ones, and you're not gonna find that anywhere else. I'm misrepresenting myself. False advertisement. We know false advertisement is illegal everywhere, but advertising covers a wide scope of communication, from publishing and adding newspaper or magazine to broadcasting a commercial on television or the internet. Advertisements cannot include any untrue, deceptive, or misleading statements that apply to the business of insurance or anyone who conducts it. The violation will be false advertisement. It is prohibited. So the first one is a misrepresentation. So in sales materials that are false, that will be a misrepresentation of what I'm saying. Now, false advertisement, if I put anything, false advertisement is if I misrepresent anything publicly, basically. So any terms, benefits, conditions, advantage, any dividends to be received from the policy or previously paid out, financial conditions of any person or the insurance company, or the true purpose of an assignment or loan against the policy. Representing an insurance policy as a share of stock or using names or titles that may misrepresent the true nature of the policy also will be considered false advertisement. Okay. Rebating is defined as an inducement offered to the insured in the sale of insurance products that is not specified in the policy. Both the offer and the acceptance of a rebate are illegal. Rebates may include, but are not limited to, the following: rebates of premiums payable on the policy, special favors or services, advantages in the dividends or other benefits, and stock, bonds, securities, and other dividends. So according to the Florida statutes on rebating, insurance agents cannot rebate any portion of a commission except as follows. The rebate is available to all insured in the same class. The rebate must be in accordance with a rebating schedule filed by the agent with the insurer issuing the policy. Rebating schedule must be uniformly applied to all insureds who purchase the same policy through the agent for the same amount of insurance and receive the same percentage rebate. The rebate schedule must be prominently displayed in public view in the agent's place of business. The age, sex, place of residence, race, nationality, ethnic, marital status, or occupation of the insured, and the location of the risk cannot be used in determining the percentage of the rebates. Okay, so rebates may only be given as reflected on the rebate schedule and cannot be unfairly and discriminatory. Agents are required to maintain a copy of all rebate schedules for the most recent 5 years. So look how this works. They're required to keep any transaction of insurance or premiums for 3 years. But if you are doing rebates, you need to keep that for 5. And be careful which type of rebates to make sure they are under the allowed ones. This regulation does not apply to the insurer's advertising or promotional gifts in which insurers or prospective insurance, what is that? May be given articles of merchandise, store gift cards, gift certificates, event tickets, anti-fraud or loss mitigation services, or other items not exceeding $100 in value per person in any 12-month period. How do you say that? Coercion? Coercion? Coercion sounds weird. It is illegal to be involved in any activity of coercion, which is intended, people watching this for wow, coercion, which is intended to restrict unfair trade or to create a monopoly. So we said monopoly is illegal. I don't know what's wrong with this. Coercion is an unfair trade practice in which an agent uses physical or mental force with the intent of inducing an applicant to purchase insurance. Si te pongo una pistola en la cabeza, that's coercion. That's illegal. Okay. Blackmailing, it's coercion. Yes. Buy me insurance or I'm going to tell you, mama, what you did last night. That's illegal. Sliding is the illegal practice of falsely leading an applicant to believe that a specified additional coverage or product is required by law. If I go and tell you, hey, you need to have insurance of your kids because otherwise it's illegal for you to have insurance and for them to not have insurance, that's sliding. Yeah, so I got excited when I saw the terms there. Sliding also includes charging an applicant for a specified additional coverage or product in addition to the cost of the coverage applied for without the applicant's knowledge or consent. Churning is defined as replacing insurance policy for the sole purpose of making commissions. The original policy values are used to purchase another insurance with the same insurer. We were backwards earlier when we're talking about it. Churning is when you're doing it with the same insurance. but you're changing or replacing the policies just because you're gonna make commission, not because it's beneficial to the policy owner. Yeah, it was. Shortening is within, twisting is outside. Yes. It is illegal to replace existing life or disability policies with new policies if the producer cannot demonstrate that the replacement will benefit the insured. So again, if you find me a policy that will pay me more on death benefit and I will pay less in premium, then yes, it's not churning. But if you're doing it just because you want commission and I'm going to end up paying more or not beneficial to me, then it's illegal. Twisting is a misrepresentation or incomplete or fraudulent comparison of insurance policies that persuades an insured owner to their detriment to cancel, lapse, switch policies, or take out a policy with another insured. So twisting is prohibited. Twisting is if you bring me another policy from another company and you say, hey, this one is better, and then you're telling me that I should lapse it or cancel the other policy, and I take out a policy with you just because you told me to, that shouldn't be, you shouldn't be doing that for your clients. Again, even though you're kind of protecting the interest of the company you're working with or for, your number one priority is making sure the customer has the benefit and the lowest premium and things like that. Not selling because you want to sell, but sell because they need the service at their best interest and premiums. Defamation occurs when an oral or written statement is made that is intended to injure a person engaged in the insurance business. This also applies to statements that are malicious, critical of the financial condition of any person or company. So I can't go out be talking crap of any other agents out there. That will be a defamation. Or any other companies out there either, because that will also be a defamation. Unfair discrimination. Discrimination in rates, premiums, or policy benefits for persons within the same class or with the same life expectancy is illegal. No discrimination may be made on the basis of individuals' marital status, race, national origin, gender identity, sexual orientation, creed, anything. It's not discrimination for policies are not legal whatsoever. Okay, so let's say we have two people, same age. Okay, perfect example. Ellie and I are around the same age, right? Like 1 year. But she was born here in the US, I was not. You cannot charge me more because I was not born in the US. You cannot discriminate to where I'm from. Or because we're different nationalities or anything else. You cannot discriminate for that. You cannot discriminate because somebody's straight and somebody's gay, or because of their religious beliefs or anything like that. If they're the same class meaning the classes for the insurance, right? So if they're within the same class, age, gender, and things like that, marital status, it has to be the same premium. So this one, right? Both males, both 35, both healthy, one is married, one is single. You cannot charge one more than the other. Those will not affect their policies. So then we have unfair claim settlement. It is the insurance responsibility to either affirm or deny coverage of claims within a reasonable time, usually not to exceed 30 days. After proof of loss statement are completed and submitted by the insureds. Failure to do so will be considered an unfair claim settlement practice. Concealment is the legal term for the intentional withholding of information of a material fact that is crucial in making a decision. In insurance, concealment is the withholding of information by the applicant that will result in an imprecise underwriting decision. Concealment may void a policy. So let's see this one.
June applicant is applying for a life insurance policy. When asked by the agent if she had seen a physician during the past 3 years, June answered yes. She stated that she had seen a dermatologist in the past 36 months. This statement was true. June had also seen a cardiologist during that same 3-year period, but she omitted that fact on her insurance application.
Ooh.
That would be concealment.
Okay, so she withheld that information. So that is a concealment. Fraud is an intentional misrepresentation or intentional concealment of a material fact used to induce another party to make or refrain from making a contract, or to deceive or cheat a party. Fraud is grounds for voiding an insurance contract. So this is by the numbers. I will take a screenshot of this because you will see this summary chart. So Office of Insurance Regulation, it's they examine at least once every 5 years. Licensing and appointment requirements, agents' appointments are valid for 2 years. Notice to the appointee of termination of appointment. So if America decides to terminate the appointment, to terminate my appointment, they need to tell me 60 days in advance. Once they terminate me, I have 30 days to notify the department of my termination. Miscellaneous producer regulations. You're required to maintain records of insurance transactions for 3 years. You need 24 hours of credit, and it's required every 2 years. 4 hours of those credits are required to be law and ethics update courses. You have 30 days to notify the department of any name and address change. You have 30 days to report agent felonies or crime convictions to the department, and 50% has to be the maximum commission from controlled business within the 12-month period. Once you see it in a table, it's always easier. So read those tables. If you have to write them out for them to, I normally have to write them down so it sticks more in my brain. So if you have to take the time to go through those tables and write them down, make note of it, please do. Now we go into chapter recap, the whole chapter. So as chapter recaps, what I'm going to do is practice questions. It will be better. Which of the following will not be considered unfair discrimination by the insurers? A, charging applicants with similar health histories different premiums based on their ethnicity. B, canceling individual coverage based on the insured's marital status. C, assigning different risk classifications to applicants based on gender identity. D, discriminating in benefits and coverages based on the insured's habits and lifestyle. So which is not an unfair discriminatory? So technically you are looking for the answer that is a legal thing to do. And they word it in a way that it's confusing. Yeah, so it'll be D. So even though I just said discrimination in anything and everything, it's illegal, the way they're wording the option is discriminating in benefits, meaning in the death benefit policy, and coverage, like how much they can cover you for based on insured's habits and lifestyle. So we know if you're a smoker, or if you do parasailing, not parasailing, like bungee jumping and airplane, skydiving, all that stuff, then you're gonna have a different payment than any other person. Which of the following would be an example of an unfair claim settlement practice? A, denying a claim within 10 days of receipt of proof of loss. B, failing to acknowledge a claim within 30 days. C, offering a quick settlement of a claim. And D, suggesting negotiations in settling the claim. Which of the following would be an unfair claim settlement practice? Are you muted, Tati? Yes. Like I saw you,
Yes.
saw your mouth moving. I'm like, oh, she's talking to me. I can't hear her.
Offering a quick settlement of a claim.
And Ellie said B, failing to acknowledge a claim within 30 days. Where were we? Would be an example of an unfair claim settlement practice. Offering or attempting to negotiate a vertical settlement contract on behalf of another person covering. So you want me to try D? Yeah, that's it. Don't double guess yourself or doubt yourself. So failing to acknowledge a claim within 30 days will be the right answer for that. Did not take a picture of it, sorry. It would be considered unfair discrimination to ask an insurance applicant about which of the following and then use that information as a rating factor to determine insurability. A, sexual orientation, B, age, C, occupation, D, address.
A.
All the other ones you need in order to know how to, like, in order for the application to put it in. Which of the following is not considered unfair discrimination by insurer? Okay, that was this one. Which of the following will be an example of an unfair claim settlement practice? So it's this one. And this is the one that I had missed in sending, so I'm gonna go ahead and do that. This has been a very fun chapter.
If you say so.
It's too texty, right? Muy textual.
Oh, Lord.
Okay, I did that one. In which of the following situations is it legal to limit coverage based on marital status? A, excessive numbers of divorces as defined by the insurance code. B, legal separation during the application process. C, divorce within the last 6 months of applying for insurance. D, it is never legal to limit coverage based on marital status. What do you think?
I think it's D.
Right? He got so happy. Come here. Come here, let's read the other one. Yeah, come here, look over there. Let's read the other question.
See, look, the baby.
Let's look at the other question. Two individuals are in the same risk and age class, yet they're charged different rates for their insurance policies due to an insignificant factor. What is it called? A, discrimination. B, law of large numbers. C, misrepresentation. Or D, adverse selection.
Two individuals are in the same risk and age class, yet they are charged different rates for their insurance policy due to an insignificant factor.
Ellie says it's discrimination. Not Irish words. Which one do you think it is?
I mean, it's discrimination, but I was trying to figure out what a significant factor.
Right? That is the question. What will be an insignificant factor? Baby, you gotta say A, B, C, or D. Which is the answer? The A, is the B, is the C, or is it D? So you guys are thinking which one?
A.
A. Permitting individuals of the same class to be charged different rate for the same insurance is the unfair trade practice of discrimination. Which of the following, we saw that one. Okay, we're getting the same question. It would be considered to be, okay, no, we did that one too. Which of the following, we saw that one too. And that one. I think it might be time to go to a quiz. What term best describes the act of withholding material information that would be crucial to an underwriting decision? A, withholding, B, leading, C, breach of warranty, D, concealment.
D.
Good. An individual applies for a life policy. 2 years ago, he suffered a head injury from an accident, so he cannot remember parts of his past, but is otherwise competent. He has also been hospitalized for drug abuse, but does not remember this when applying for insurance. The insurer issues a policy and learns of his history 1 year later. What will probably happen? A, the policy will not be affected. B, the policy will be voided. C, the insurer will sue the insured for committing fraud. D, because the insured is currently not a drug user, his policy will not be affected.
A D.
You said dog?
Yeah, dog.
Dog? It's one of those tricky questions that they ask you.
Yeah, because what got me is that he did not remember because of the accident.
Mm-hmm.
But they're not saying that at the moment he's using drugs. He used.
I see your logic. So we go with D? What are you thinking? Because I know it's like, they're not gonna sue you.
Yeah.
It's
Not gonna be voided.
It could be that it won't be affected, you know, just like D says. Or it could be that they take a, hey, you were supposed to remember, even though because of the accident he can't, and the policy will be voided. But I think at this time they should be doing their underwriting process and things like that. But again, it's one of those questions that makes us overthink the things that we shouldn't overthink. So which one do you think you'll go with? So you think the policy will not be affected, or because the insurer is currently not a drug user, his policy will not be affected? He has also been hospitalized. And did they had 1 year or 2 years? I can't remember. Do you guys remember that from previous chapters? Does the insurance company have a year or 2 years to come back and say, hey, by the way, I found this out? Used to? So which one do you guys think it will be? And again, I mean, we're on the practice questions, so we can click whatever and then learn it instead of, so that we don't use, do you want me to, okay. Okay, so in insurance, fraud is the intentional misrepresentation of material information that is crucial when deciding. So even though we went with D, because we're thinking the policy will not be affected, like it will just be the answer of the policy will not be affected. See why? That's why I was like, bringing it to that. Because sometimes they give you two that basically say the same thing, but they want the simplest answer to it. Okay. I messaged them when I saw him going over there to come and check on the baby.
It's the same one.
Oh. Excessive divorces will be the wrong answer.
I think we're ready for a question.
Baby, baby. Yeah, they're all the same. So let me scroll more down. Okay, this one. An insured submits a proof of loss form within 10 days of a loss. The insured, however, does not acknowledge the form for 3 months. Which of the following violations has the insurer committed? A, dragging, B, unfair claim settlement, C, rebating, D, inappropriate delay. So an insured submits a proof of loss form within 10 days of a loss. So el asegurado perdió, yeah. And then la compañía does not acknowledge the form for 3 months. Which of the following violations has the insurer committed? I think it's this one. Because I don't remember reading anything about unfair claim, any form. Insurer cannot delay the benefit of the payment, so I think it's that one. So unfair claim settlement. I'll take a screenshot just because
Yeah,
I didn't get an answer right away, or
because we doubted.
cutting me or anything like that. This chapter is a lot of reading, but like you'll understand the concepts, and it's more como memorizándolo. Which of the following would be an example of an unfair claim settlement? Denying a claim within 10 days of receipt of proof of loss, failing to acknowledge a claim within 30 days, offering quick so
Acknowledge the claim.
failing to acknowledge the claim. Good job. Niñas, el bebé. Pues, okay. All of the following are true regarding rebates, except A, rebates are only allowed if specifically stated in the policy. B, rebating can be anything of monetary value given as an inducement to purchase insurance. C, dividends are not considered to be rebates. D, rebates are allowed if it is in the best interest of the client. Yeah, no, and that's what it's telling you, are not considered to be rebates. So you're looking for the wrong answer.
I'm looking for the wrong answer, right?
Yeah. So what does rebate does not mean?
See?
See, dividends are not considered to be rebates. That's true. Dividends are not rebates.
I gotta learn just accept and not.
Ellie says D.
Rebates are allowed if it's in the best interest of the client. Let's go with D.
Good. Made that trying to help. Actually,
It's illegal unless it's beneficial for the client.
mhm.
The best interest for the client.
Yeah. Okay. Question 2, an agent's client needs additional insurance, which the agent's own insurer cannot provide. The agent has to solicit additional coverage from another authorized insured. This coverage is known as excess, authorized, controlled business, or rejected.
Hold on. An agent's client
Needs
insurance, which the agent's own insurance cannot provide. The agent has to select additional coverage from other authorized insurer. This coverage
has to be, yeah. So Ellie is eliminating B.
Yeah.
I mean C, I'm sorry. She's eliminating C. And I'm guessing D. Or I don't know, I don't want to eliminate D. I don't know which one you guys think it is.
Well, I will go with B.
With B?
Um,
Authorized? Okay.
The question is a little confusing.
Excess. Okay, question 3. In accordance with the Code of Ethics, agents must provide a completed application to A, the Florida Insurance Guarantee Association and Director, B, the prospective insured and the insurer, C, the director and the insurer, D, the soliciting agent and the insured. In accordance with the Code of Ethics, agents must provide a completed application to which one? Yeah, because they need a copy of it too. Ellie thinks it's B, that the prospective insured and the insurer, like the company, la compañía que va a dar y el asegurado. And every time we process an application, a copy of it gets emailed
Yes.
to the one buying it, and then a copy is sent to the company. So let's see.
Mommy.
Good.
It's a year reading. You should read them that.
All of the following are the general qualifications for an agent's license, except be found competent and trustworthy, be a state resident, pass a criminal background check, or have a high school diploma. You do not need a high school diploma. Any inducement offered to the insured in the sale.
Look at this. My son is going through YouTube and he goes, Mommy, that's the guy from your meetings.
That's a guy from the meeting.
It is.
That's so funny.
Yes,
Any,
it is.
yes, it is, baby. You're right. Any inducement offered to the insured in the sale of an insurance policy that is not specified in the policy is an unlawful practice known as rebating, twisting, false advertisement, or coercion. Any inducement offered to the insured in the sale of an insurance policy that is not specified in the policy, it is an unlawful practice of, known as. Mhm.
Between twisting is internal, right? Coercion or
Ellie says rebating. So inducement es cuando te estoy induciendo, te estoy ofertando, like induciendo to the insured, like I'm offering basically something for the sale of an insurance that is not specified in the policy. So rebating is allowed as long as it's specified in the policy. But this one is not, so it's an unlawful practice known as rebating. That's what I think too. Which of the following is an agreement between an insured and an insurer where the insurer agrees to indemnify the insured for the specific losses in exchange for a premium? Reciprocity, the indemnity clause, the insurance contract, or the insurance guarantee? Ellie says contract. And I agree. It is a contract. So this sounded so wordy in it. If it's an agreement, it's a contract. And then an agreement for indemnified the insurer for specific losses in change of premium. So that's the insurance contract. Basically what we have, our insurance contract says, I'm going to pay your premium and you're going to indemnify me in the case of a loss. What is reinsurance? An agreement between an originator insurance and the ceding insurer, an agreement between domestic and foreign, an agreement between an insurer and insured, or an agreement between a ceding insurer and an assuming insurer. Yeah, originator and ceding means the same thing. So it's D, Elises. D as in David. Perfect. In insurance transactions, fiduciary responsibility means A, maintaining a good credit record, B, being liable with respect to payment of claims, C, commingling premiums with agent personal funds, D, handling insured funds in a trust capacity. Ellie says D as in David.
Yes, and David.
Good job. All of the following could be considered rebates if offered to an insured in the sale of insurance except A, stock, securities, and bonds, B, an offer to share in commissions generated by the sale, C, dividends from a mutual insurer, or D, an offer of employment.
B.
Which one?
Commission.
An offer to share in commissions generated by the sale.
All the farming could be considered.
That's a rebate. So we're looking for the wrong answer, Ellie says. Ellie thinks it's the employment, and I find it awkward that an employment will be a rebate, so I'm leaning towards that one. What do you think? Should we click it? Dividends from a mutual insurer. Look at that. Maybe me puedes traer agüita? Right? Me too, I thought it was weird. That's why I didn't even fight you. Well, not fight you, but you know what I mean. I mean, beat you up. Right. Question 10. When an insurer terminates an agent's appointment, the insurer must do all of the following except A, make sure that the agent's contract rights are not violated. B, provide a 30-day advance notice to commissioner. C, provide a 60-day advance notice to the agent. D, file a written notice with the Department of Insurance within 30 days of termination.
D.
No, they file it after. they let-
Insurer.
So it's
Insurer.
advance to the commissioner. They only have to do an advance notice. Está conmigo el cable, ¿lo puedes sacar? They have to provide us an advance notice, but not an advance notice to the commissioner. And I think I explained that wrong when I said it. They are
Yeah,
the ones
again,
that have to let,
I did not read the accept.
they're the ones that have to let the commissioner know, or the department basically know that they terminated our appointment, but that's 30 days after the appointment is terminated. Well, they have up to 30 days. Question 11. What level of authority is given to the Office of Insurance Regulation with respect to the examination of insurers' activities to determine compliance on fair trade practice laws? Absolute, voluntary, limited, or civil?
Isn't it absolute? They have to do it, period. I don't remember seeing that.
Yeah, I don't remember seeing it. I think we jumped through it. So the Office of Insurance Regulation with respect to examination of insurance activities to determine compliance, the absolute, voluntary, limited, or civil. So Tati thinks it's absolute. Might be absolute. We'll go with A. I remember seeing something that if needed, they'll give the things to the state or federal law for criminal stuff, but let's go with absolute and see. It is absolute. See, I was about to confuse myself. Question 12. An insurance company has published a brochure that inaccurately portrays the advantages of a particular insurance policy. What is this example of? A, unfair claims, B, twisting, C, defamation, D, false advertisement. Advertising. False advertising. When twin brothers applied for life insurance from company A, the company found that while neither of them smoked and both had a very similar lifestyle, one of the twins was in a much stronger financial position than the other. Because of this, the company charged him a higher rate for his insurance. This practice is considered A, twisting, B, controlled business, C, adverse selection, D, discrimination.
Discrimination.
Discrimination. Good job. An insurer that holds a certificate of authority in the state in which it transacts business is considered a local insurer, or certified, or self, or an authorized.
An insurer process
We saw this one.
is considered a authorized insurer.
Yes. Last but not least, the Office of Insurance Regulation is responsible for all of the following insurer activities except premium financing, issue of securities, viatical settlements, or policy forms.
B. As a bond.
Good job. So, and I'll screenshot that one, and I think I have screenshotted before, just because it names the two offices in there. And let's see, we passed with flying colors, I believe. All right,
Even though we passed it, I still need to go over that one.
you still what?
I still gotta go over this one.
Yes, we gotta do, I think tomorrow, before we jump into chapter 6, we'll do another quiz on chapter 5.
Okay.
That way it's, because that's a lot of concepts in there. So that was great work. I am going to go ahead and stop the recording. Let me stop the share.
Oh, you couldn't see me. I have to. I can't see myself on the when you're sharing, so I don't know where the camera is.
Oh,